right. Good morning, everybody. Welcome to another Engineering the Markets. My name is Jared. Happy Wednesday to everybody. It is December 14th, 2022. We are past the big bad CPI. And as we experienced yesterday, market was highly volatile in both directions, I would argue, because we did see an initial bullish reaction to the CPI. The marketplace rallied out of some of our price regions from past couple of weeks, but in a massive sort of rejection, the market did retrace pretty much the majority of that entire reactionary candle, and most of the trading session was experiencing downside pressure. We obviously saw some defense near low of day and near some of the previous day closes, but ultimately a lot of stocks either fully retraced to their previous day close, or in the case of some weakness in stocks like Tesla, they were actually making new 52-week lows and breaking support. So what does this mean for us as traders, and what are some things we can kind of prepare for today? I think ultimately the story is about the same. When looking at the SPX, we are seeing a breach of the expected move, mostly in the pre-market and as we opened, but we have returned inside of our weekly expected move range. There was a little bit of price reaction to this upper boundary. Nothing significant, I would argue, but a lot of the downside, I was looking at some risk assessment near about 406 SPY, and the pre-market lows after the reaction were actually hitting near the SPX expected move. So it was a contention zone for some of the high-low trade in the morning. But once we started to lose low of day and the morning session started to fall apart, I think the weakness really became more apparent throughout the entire marketplace, as opposed to a couple of key stocks which were dragging the indices down early in the morning. So we are once again just kind of returning back to where we started on Monday. That's kind of that PDC retracement that the SPY also was close to experiencing. And as we're preparing for today, we obviously have another catalyst, which is the FOMC. This is going to be the statement, which is released on 2 o'clock market time, and then the press conference from Federal Chair Jerome Powell at 2:30 Eastern. So essentially 2 market moving periods of time. I would expect a lot of algorithmic trade in the statement, and then potentially the press conference leading to a more decisive move. In the morning trade, given the retracement depth of yesterday's move, along with the fact that we're kind of sitting between the highs and lows of the afternoon close, this is where the market decided to place its value on yesterday's trade. We're inside of yesterday's value region, and that's kind of important for anyone who's looking at like a market profile structure of what to expect today. Anytime we're sitting in these regions, it's usually a little choppy. We can often play to one side or the other. You know, there were some key interactions on the short-term S&P. Obviously, near 400 is a pretty key price. And then I would argue the upper boundary is closer to about 402.40. You know, this right here, this peekaboo outside came back into 400. So it tells me there is some defense here at about 402.40, and then that 400 is kind of like your ideal support. You know, if we can hit 400, tends to be a bit more responsive to the upside. So that range is not exciting or wide in a lot of ways. And unfortunately, because we're opening ideally in this area, it is prone to be a bit choppier today. All that said, I would be looking for a couple of orb type setups just so that the risk to reward on momentum is tradable, and trying to play towards one of these two extensions. The NASDAQ as well, you can argue like the highs and lows from yesterday's trade. Once again, I would kind of focus in on this spike high. We saw a breach, and it definitely hit like our pivot, but the sell swing indicated that the market's not really ready to move higher from this point. So anywhere between these highs and these lows somewhat represents what I expect the market trade to look like for the morning, and really just trying to position around those highs and lows accordingly. So with the CPI, the Fed fund rate probabilities did indicate further acceptance of 50 basis points for today. Essentially, we're kind of at like a 4 out of 5 probability that it's going to be 50 basis points as of today. The market also saw a little bit of adjustment into February. This was after the CPI was fully released. The market is seeing that if today is 50, there is a potential probability that the first FOMC on February 1st could lead us into a 25 basis rate hike. That's not to say that the Fed is necessarily getting less aggressive. It's indicating that there's going to be a more stepwise approach to get us to 5%, which is still the objective for May to June of next year. Some of the adjustments, though, have indicated that we might be one range lower. You know, the ending probability of where we're headed has increased in that higher probability. So a little bit of adjustment here. Normally, this would be seen as a little bit positive for the market, but obviously yesterday, the rejection and the fact that the market was inclined to sell, that reaction might indicate a little bit of additional information. And this is where we're going to step into the discussion, which is what theme is the market most likely to be responding to and rewarding for the end of this year, which of course most of this year has been focused on the inflationary theme, along with what to expect potentially for 2023, assuming data kind of continues to confirm this assessment. So, sorry, got a message, just making sure it's not for me. So what are the themes? And we talked a little bit about this yesterday, but how do these themes fit into the market cycles? And more appropriately, the business and economic cycle lead lag that the market tends to anticipate by buying and selling certain assets at different times. And I would argue that historically, anytime there is an inflationary theme, the market tends to be somewhere in a early stage bear market cycle, along with the types of asset classes that tend to outperform during that period. As we saw last year, some of the themes were, or I'm sorry, as we saw this year, you know, the majority of this year, some of the themes have been value stocks, and more specifically stocks with lower growth metrics, which are less impacted by rate changes inside of something like the 10-year bonds. Consumer staples, inherently a more defensive name, but also depending on where you're looking, it's the types of stocks that can pass the inflationary pressures onto the consumer. And therefore, the market sees that their earnings contraction is either going to be less or somewhat protected, usually to, basically keep their earnings in line with expectations and to not have that become a part of their repricing, usually the PE repricing that we often talk through. Energy stocks, this is more in line with the strong commodities bull market that was seen in oil in somewhere in the latter half of 2021 and then slightly into 2022. But the energy stocks are also going to be a little bit lagging that commodity bull market due to the inflation that starts to affect oil and gas pricing for the consumer. They often will start to benefit from the term structure of the, let's say, crude futures market, and how these participants often have to roll their active contracts. So it's inherently a bullish bias due to things like backwardation. Higher demand, and of course, after leaving an expansionary phase, which arguably we are fully out of at this point in time in the economy, these producers of energy are the ones that tend to be the benefactors. Now, I would say we had some other forces last year and this year that maybe made this a bit of an exaggerated bull market. It definitely was stronger than most people anticipated, and I would argue that a lot of predictions didn't really say that energy was going to outperform to this degree, but we've certainly seen the technical alignment and some of the strong rally sort of trend approach to these energy stocks. Materials, kind of a similar story. Usually the commodity bull market allows for that demand to kind of return, but there's also some dynamics here with the dollar. And we'll kind of talk a little bit about that as I get to the correlations. But near the tail end of something like an inflationary market theme, we're also going to start to see things like bonds. And usually this is where the story starts to shift as to how we explain market reaction to things like rising and falling interest rates. Bonds in particular, sort of the latter end of bonds, are often going to be indicative of whether or not the market, and more specifically the bond market, sees risk in the short term or in the long term. And usually if there is risk in the short term, the move of liquidity often goes into longer dated bonds. Because if the economy, let's say, is going into a period of hardship, often you're going to want to protect and look out further in something like a 10, 20, 30 year cycle, and basically put some of your risk-free allocation towards those assets. If that's true, then something like 10, 20, 30 year bonds tend to rally or just start to go higher. That will, of course, drop those rates accordingly because they are fully inversely correlated. And once again, the yield curve between short-dated and longer-dated treasury assets are going to change. The perception of that curve is indicating things like a recession to come. And this is where some of the yield curve inversion starts to become a factor in how to perceive that risk. So there's a dynamic here that's, for the most part, somewhat complex to explain to someone without that type of background. But the basics are that how bonds perform, along with the actual curve inversion that we're seeing and maybe looking for a change, that will dictate the market's appetite for risk in things like the short-term year, let's just say next year. So higher yield curve inversion in an inflationary theme, not necessarily a bad thing for equities, for stocks, but as we get into a new market theme, in this case, looking at potentially a recessionary theme, that perception of the yield curve becomes more of a risk factor. Well, we will look at that in just a moment. But all in all, if we're looking at 2023, we can kind of see what themes play out during this type of period. And once again, this is speculative, but you can start to understand things like healthcare, bigger pharma type companies. They're not necessarily immune from a recessionary contraction, but they oftentimes have protective measures in their pricing power, along with the fact that a lot of these are necessary. They're essential medical type procedures, any sort of, prescription that a consumer might need. Those things just can't be discarded. If your physical and mental health requires them, those are things that persist regardless of your economic condition. So these themes are what's kind of coming, and what we're starting to see in the charts. The technicals are showing that healthcare is becoming a bit of a leader in the past couple of weeks. And once again, just kind of shifting to a quick view here, if you look at the past month of performance, healthcare is not necessarily the outperformer total. It's kind of higher to utilities, but most of these top three represent a very defensive nature, and more specifically, a shift into what is potentially coming, where the laggard performance is now being seen in energy. And once again, you definitely want to be looking more in the monthly cycles, weekly to monthly cycles for a lot of this. You don't necessarily want to dig into minutia, because 5% rallies can kind of occur from any point in time, but it's more about how persistent are these themes and how much of those gains are kept by the market. Are we seeing pushes to new all-time highs, or are these rallies simply low to high sort of pullback type trades where, of course, the percentages can be a little deceptive? Packaged and fast food, this is kind of in line with some of the protective nature of how these can price towards consumers. But once again, if there is economic hardship, there tends to be less spending in things like restaurants or just dining out, and a more a shift into things like cooking food at home, trying to find cheaper options, and then of course fast food, more the convenience of just daily eating and drinking. Tobacco and alcohol, it's kind of an oddity, but usually sin stocks tend to outperform, and that's kind of the theme of, if economic hardship is here and things are rough, some consumers tend to kind of delve into this portion of the industries. And specifically alcohol, I find, tends to be a kind of a leader near the tail end of the lower bounds of a contractionary phase. It's kind of like that full period of depression. And unfortunately, things like tobacco and alcohol are simply where legal consumers go to find that sin stock. And then, of course, utilities. Similar to healthcare, it's a necessity. It's not something that can be discarded or reduced, and yet we tend to see the market actually reward utility stocks additionally because they perform similar to bonds, and that's kind of the key. They tend to have a higher dividend yield, but they also have a slightly lower beta at times, although we've seen some volatility in utilities this past year. So where does this approach come from? And there's multiple ways to kind of visualize this. This has been described through different models. The one that I'm kind of leaning on for today's conversation is this particular one, which is a breakdown of economic contraction and expansion relative to stages. And what I like about this is it's a lot more minute in where those cycles kind of begin and end, but it also tells you what to do in regards to when to start stepping away and when to start stepping in to certain products. If the assumption is true and we're somewhere either here and coming away from stage 6, or if we're somewhere entering into stage 1, finding these boundaries is often a little challenging. But if we're somewhere in this stage, then the preparation for the continuation of economic contraction based on this model is to be buying bonds, and essentially to be positioning around the longer term yields of something like a 10 to 20 year, because economic hardship is starting to be discovered, basically to be derived. And the goal here is to be a little bit ahead of the current cycle that you're in, not only in what you're selling, starting to unwind a little bit of your winners in regards to what's been outperforming as of late, but mostly to avoid the risk, because there will be drawdowns, there will be pullbacks and the like, but the ultimate goal is to be in assets that are more likely to outperform and usually to be a bit more protective of a portfolio if you are cycling through these different asset classes. The timing of this is usually not necessarily exact, because like a lot of things, no one knows when you're truly entering into a particular stage, but there are markers. And usually if these cycles are to be trusted, you're often going to see the markers from a technical sense in the regards of some of the bonds starting to outperform equities as of late, along with, are we seeing the ending markers of something like a stage 6 being left? And I would argue that a lot of our inflation sensitive assets are actually declining right now. They are still outperforming from the year-to-date basis, but the question is, will they continue to outperform? And in doing so, if you're allocated towards them, is it time to start selling them? Is it time to basically locking in those profits? So one of the hardest things about being an investor is you can kind of know when to buy, relatively cheap allocation. When certain assets are undervalued, you know when the market is giving you good pricing, but knowing when to sell is just as challenging, can be as challenging, because sometimes it's more based on the actual economic cycle that the market's experiencing, not necessarily the company's fundamentals, or when is that industry seeing a boom and bust cycle. So it's usually one of the tricks and traps about these high to low trades and the full cycles of the market is you want to lead coming in and you want to anticipate going out. Knowing when to sell is around the time when we get into economic expansion. And you would kind of argue that to be true based on 2020, because while it was an abnormal economic expansion, bonds were one of the worst performing asset classes in 2020 to 2021. And that's just the market moving into other more riskier assets during that time. So last but not least, correlations. And I might not be able to get through all of this here, so I might save like a portion of it for tomorrow. The rationale behind what we've been looking at, and in regards to two particular indices, the 10-year yield, which for the most part is going to be the major driver of the 2 to 10 yield curve inversion, along with the dollar index, which is, of course, seeing some decline as of late. And we're noticing that a lot of the peaks and valleys inside of the dollar correlate to some of the market moves, along with things like gold and silver. We certainly called out that correlation last year. What stage are we in right now? So the argument is that we're entering in stage 1. So the correlation effect, to some degree, depends on what theme the market is responding to. And this is often a little tricky because we get data that sometimes puts a little bit of a foggy lens on whether or not the market has fully accepted the inflationary theme being over and or the recessionary theme being fully active. There's a couple of leading indications of it, but all in all, to say that this is purely how to act based on this correlation, I would say that it's shifting right now. It's not necessarily in alignment. And if you were to do like a correlation coefficient, you would actually notice this starting to change. So give me 1 second. I have a little bit of a cough. Okay. This is part of the reason why we're probably not going to finish, because I can't talk. But the correlations here depend on how the market perceives these moves. Uh-oh. Did we lose YouTube? I'm showing that we lost YouTube feed. Okay, it looks to be back. It must have been just a blip. Okay, yeah, and the audio is still good over here. Let's see. All right, audio is still good. So with only a couple minutes, I'll probably just leave this here. We'll talk about it a bit more tomorrow. I'll have more time. But essentially, the response to how equities perform, I think, is dependent on these themes and whether the market is accepting them fully. As we saw this entire year, there's been a pretty simple correlation to whether or not something like the 10-year interest rate and the dollar are moving higher and lower. And for the most part, the theme has been, if those two products are moving higher, then there is relative weakness inside of stocks. Not all stocks, obviously energy is a standout, but for the most part, the indices underperform. If those products are moving down, those indices tend to outperform, and they tend to be sort of positive periods for the indices. The why as to why that matters and what the market perceives is dependent on the theme. So for tomorrow, we'll look at that a little bit more closely. We'll cover how the inflationary theme has been driving price behavior inside of 2022. And then looking ahead to 2023, you'll notice that the correlation flips. And the reasoning behind it is based on whether or not the market fully accepts the fact that we are heading towards or in a recession. And that's where those types of correlations will break, and ideally we'll be able to use them, but to the opposite effect, which is looking for peaks and valleys in those indices will lead to different decisions inside of something like the indices. So very powerful kind of tool, especially if you're someone who's good at the charting side and looking for some of those bigger inflections, finding those moments and then taking action, whether it be trade or portfolio related. We'll talk about that in tomorrow's conversation. As of now, stay tuned for pre-market prep. I apologize I couldn't get through it all today. Be on the lookout for the FOMC. Just kind of know we have a potentially choppy morning session. And as always, like and subscribe if you like the content. We'll talk more then.
All right. Good morning, everyone. Welcome to PreMarket Prep. I hope everyone's having an amazing morning. Hopefully, you guys had an incredible day yesterday. Good morning, Peter. How are you doing today?
Good morning, Carlos. I am doing
I'm always forgetting to
fantastic. And
put my
you?
headphones now. Hold on a second, Peter. I can't hear what you're saying magically in my head. That's better. Good morning.
Good morning. Can you hear me now?
Yes, loud and clear.
Okay. I was just asking how you were doing.
Doing good, my friend. Doing good. Can't complain. Hope you are doing well also.
I
Um,
am.
All right, excellent. Guys, let's get to some of the stuff we had yesterday here. And if we, my things are a little funky this morning, so bear with me. Um, Looks like my hotkeys might not be working properly. That's okay. We'll do this manually. So look at some of the stuff we had here yesterday, guys. We had mRNA, we had Tesla, we had Apple, Nvidia, BA, and Coin. And obviously, the big elephant in the room, guys, was the overall market with the CPI data, as you guys were aware, of course. So again, a lot of stuff that was very active. There were a few tickers though that were kind of doing their own thing, and mRNA was one of them, guys. I mean, this thing was very, very strong. A couple of us had a trade towards the long side here. I did as well. Unfortunately, I did not catch this incredible move that we saw towards the upside, and this is a great example of a ticker that was in play, that was strong. But man, the spread was so nasty on this thing, going from like 20 cents at times to 70, 80 plus. I mean, it was just wild. So, little bit on the difficult side to trade, but what a move it did yesterday here. Again, doing complete opposite of what everything else did. And you can see that on the daily here as well, as it had a nice gap up in continuation there. Tesla, on the other hand, continues to struggle drastically here, guys. The last two trading days, I mean, just look at the sell-off. We had a gap up yesterday with the CPI being good and all that good stuff, but then look at the sell-off all the way down to almost, was that 156? Yeah. So I mean, it's just not good for Tesla right now, and they're down another 1.2 this morning. So again, good volume. This will be in our list again. We have Apple on deck as well, just doing all, and for the most part, the rest here we're just kind of doing their overall market stuff. But we do have, I think BA was another one that also had a little action towards the upside. Was it this one? Oh no, never mind. I thought it was this one. So another one that was actually really good. That was on the upside. It was Tesla and another one. I can't remember. I'm sorry. mRNAs and another one that did very good towards the upside. Can't remember the ticker, but either way, for the most part, everything sold down. So if you were short yesterday, you made out pretty good, and some more cleaner than others. This is why we usually like to watch stuff with volume. If you look at Apple, if you look at even Coin yesterday, it sold off pretty aggressive and clean. So that was our list, guys. Today is going to be a fun, exciting day. Let's give a thumbs up for Jai, by the way, with engineering the markets. Today, going into a lot of details about the market cycles, which again was very informative. So shout out to Jai for that. Let's give him a big thumbs up over on YouTube. Peter, overall market situation, what do we have going on?
Yeah. Just the bottom of your screen, by the way, looks a little funky. I'm not sure if you got
Yeah,
this
so
stuff.
I think there was something that got screwed up here, and I just can't figure it out. It's missing the banner
All right.
in the bottom.
As
Yeah.
long as you know, I know how difficult it can be to configure those things. So
Oh yeah, I
you
will not
got
be doing that now live.
no. Well, look, Jared did a great job of giving us an overview of the market, and as he said, the big picture stuff is sort of what's we can expect going forward. But for today, there's really only one story out there in the market, and it's all about the Fed. We're expecting the Fed rate number release. So don't look at the economic calendar here. This is from yesterday because Norm updates that, and so that is not updated. But 2 o'clock is when the number gets released and the computers will react, right? So we're going to see a reaction to whatever the number is, up or down, very quickly right at 2 o'clock. Usually what happens is that sort of settles down a little bit. Then we get Powell, as the Fed chair, come on with his press conference at 2:30. That's a little bit slower to react because it depends on what he says in his fixed comments, what the tone of that is, and then, of course, the questions and how he answers that. So this afternoon is really when we're going to see all of the action. Leading up to that, right now, we're not seeing much happen in the markets overall. I don't know if you can put up a SPY chart or something, uh, Carlos, sorry. But right now, not much is happening. All the indices are sort of right near the close of yesterday. I've noticed that pretty much all of the large cap stocks, they're all within 0.5% of their closes of yesterday. The overall futures market was very muted in the overnight session. So we're just not seeing much. Everybody's in wait of that number. Of course, the one exception Carlos already mentioned is Tesla, which is once again showing weakness, down a little over 1.3%. So it is continuing to struggle here. But and look at that, below 160 so far this morning. So anyways, but the really, I think we should expect the open will still be the open. We'll get some movement. There might be opportunity there, but I think we're going to see some quiet price action through the mid-morning and early afternoon session, with all the energy and attention focused right at that 2 o'clock number. So I would recommend, if you're trading and you do find a good trade, that's great, right? Take advantage of it. Just be aware, right at 2 o'clock, the market could shoot in one direction or the other, and then maybe retrace a good part of that. So don't panic if you're well into a trade, but if you're in something sort of near your break even, there's a risk that this, could stop you out with that massive move, or it could give you an awesome trade, right? Depends on which direction it goes and what you're doing, but just be aware of it so that you can be ready for it. All right, so that's what we're looking forward to. You notice that our gappers list is relatively small this morning. I was noticing on Trading Terminal, there's a bigger gappers list there, but almost everything is sort of 20 to 80 million in shares. So they're all sort of small to mid-range float stocks, which are moving around a little bit more. But basically, there's nothing of size that is moving on our gappers list. I think the only thing I noticed, which is Delta, and we'll talk about that in a second.
Yeah, I was looking at that too. Delta looking pretty good this morning. Some stuff going on there as well. All right, let's take a look at our list. Our gappers list. Nothing towards the downside today. Some stuff towards the green side this morning. Let's start with RNA. RNA up 37%, guys. And when I was looking at the daily earlier, I'm not a fan of this daily. Extreme light volume. If you look down here, if you look across the board, you see 634,000 shares traded. Seems to be a little more on the higher side of the average, but for the most part, again, just not a whole lot of volume. Today, up 38%. Norm, I'm sorry, I'm so used to saying Norm, but
That's all right. I'll be Norm.
You'll be AKA Norm for today, AKA Peter. What is the situation with RNA?
So RNA is a biotech. They've got phase 1, phase 2 trial of their RNA therapeutic therapy, which to delivering, I guess, RNA to muscles, which is showing good results. That's what's causing the pop today. As we know, these things tend to, get the big leap when they announce strong phase trial data.
All right. So, again, guys, we'll see. I'm not a big fan of these, as you guys know. What's the float again on that one? Did we have the flow here? It's a 50 million, so it's not low flow. But again, I'm not a huge fan of this one. It is in play today, given the pop. I just think we need a little more information to get this one going. And pre-market too. I mean, pre-market, if you look at it now, you have by a 10-cent spread at the moment. Not bad, a $15 stock, but we want to see better. That's for sure. So on the fence, we'll put it as a possible for now here on a risky pile. And although it's not a low flow, I'm still going to put it on the risky pile because just the way this is moving today, you need to be extra careful, especially with if this spread is not continuing to get a lot better and if we don't get more volume. Next on the list, we have KYMR, and this is up 33%, 640,000. Looks very similar to RNA. Flow here 43 million as well. Peter, what's the latest and greatest on this one?
Once again, similar story here. This is another biotech. They are announcing positive results from their phase 1 clinical trial of their treatment process. So that's causing it to leap up this morning.
All right. So another one, guys. Here again, another one that volume almost the same, 640,000 for the most part. Doesn't get great volume throughout the daily chart here. So I'm not a fan of these. So I have RNA here. I'll keep that one. And again, not one that I'm going to be paying too much attention to. Now, here's one that we might like this morning, and that is Delta. They're up 4.2, 673,000. And when we see Delta or any airlines moving like this, there's usually something going on. Peter, what we got with Delta?
Yeah, yesterday we saw a lot of weakness across the airline sector. I think it was led by United, which announced that they were making a big buy of planes from Boeing, and I
Yeah.
think the whole market said, okay, if everybody needs to replenish their fleet, especially in an environment where they then have to finance a lot of money, that sort of caused the whole airline sector to go down. This morning, though, Delta has actually increased their profit targets, so their guidance for Q4. They're saying that there's bigger demand. They're seeing robust air travel demand, in their words. So anytime they increase their guidance, that shows confidence from the company and allows the market to, sort of up what their expectations are. So that's what's coming out of Delta. That's probably going to raise the entire airline sector a little bit today. So we'll see. That might actually get some good moves at the open. And as you said, it's not bad so far. 600,000 shares, up 4%. We'll see. I mean, the airlines, I've lost. I don't know. I struggled to trade them because they used to be so good. The
Oh
beginning
yeah,
of
yeah,
COVID, remember they were like fantastic. We would always be
yeah.
watching the cruise lines and the airlines. Nowadays, just because there's that good news doesn't necessarily mean this is going to go up at the open. So make sure you take your cues from what the stock is doing. But right now, it's looking positive.
Yeah, I cannot agree with you more, man. I remember the list used to be CCL, American Airlines, or United, and maybe NCLH, and that was on our list. The way AMD's on your list, it was on there all the time. So yeah. So I like Delta this morning, guys. Also, nicey stock. So usually they tend not to have the best pre-market activity, and volume will come in at the open nicely here. So hoping for a good opportunity there. Here's D-Dog this morning. They are up 3.8, 262,000 shares traded. I don't like what I'm seeing here. Peter, unless you have any great news for me to keep this on deck, this does not look good to me.
I mean, they have good news. It's not the fantastic news I like to trade off, but basically they got an upgrade. Interesting, it was from perform to outperform. So this is from Oppenheimer. So relatively influential. Datadogs are, it's a relatively small float, so it can move on this type of news. But basically, it's just an upgrade.
Okay. All right. I'm going to keep it off my list, guys. I don't really like the pre-market action here. And this ticker is one that, for the most part, trades on the worst side of things and actually having good days. Let's look at Plug this morning. Plug on here is up 3.3 this morning, 254,000. We haven't traded Plug in quite some time, but it's been an amazing downtrend here, as you can see on the daily, probably because it's not getting great volume, but it really hasn't been front and center on our list. This morning, they're up 3.3. I don't see anything overly exciting on it that's sticking out saying, hey, this could possibly be in play. It can really go either way here. Any news on this one for this pre-market?
No, I don't have any news on it. So if anyone else, has a hint as to what's happening, I'm not sure what's making it move this morning.
Gotcha. All right, so I am going to, we'll put it as a possible because there's not a whole lot, so we do have room for this one to see if it's going to end up doing something. So 252 up 3.3 at the moment. We'll keep that on there. Let's see what happens. Here is Lee. Lee is up 2.4, not much volume, 254,000 at the moment. Again, I don't think there's really anything going on here as far as it being in play. I look at some of the other Chinese tickers. I do like Baba's daily. Hopefully there'll be a sell-off here in some time because I love the way this stock sells off. But then we'll take a look at NEO quickly. Same thing, just kind of moving sideways, but no volume on them this morning.
I can't help but think so we've seen some good movement out of LI, Lee, and NEO, XPEV even. They've been moving well over the last couple of weeks. It seems like as Tesla has been sinking, the Chinese electric car manufacturers have been picking up. I noticed that Lucid and Rivian, for example, they're not seeing the same lift as you get across the others that I mentioned. So I feel like it's sort of sharks circling, especially in the Chinese market, where Tesla's had some relatively struggling or challenging news there about having to reduce their prices and some of the sales estimates, which have been in conflict some of the time. So yeah, I don't know. That whole sector though has been interesting. You can sort of pick some of those and they get volume, and on any given day they could move. You almost have to sort of watch it every day, and then you might get lucky, right? Because you just today maybe or maybe not, right? It could be 2 days from now.
Yeah, exactly. Speaking of car companies, Tesla is a good one. We're gonna definitely have that on our list, guys. I mean, this stock has been heavily in play already. 1.8 million shares traded. It is down 1.3 after not such a good start to this week. The two really red days in here, creating a new low. I think this is your new 52-week low. Yeah, absolutely. So there you are. You got a new 52-week low that took place yesterday. What was that? That was right here, 156, might be 157, 156, 85 it looks like. So that's your low of your pre-market. I'm sorry, the low of yesterday there for Tesla. So definitely on our list. Great action this morning. And let's see if let's see. We know the volatility is going to continue on Tesla. I don't see that stopping anytime soon. All right, Peter, anything else you like besides what you mentioned already?
Well, look, for me, I'm going to be keeping an eye on the old usuals, if you will. So right now, that's Apple, Amazon, and AMD. I guess anything that starts with an A, apparently. They're they're not doing anything pre-market, right? The volume's actually pretty low, and as you can see, the price action's relatively poor on all of them. But if anything's going to move a little bit as this market opens, I figure it'll be them outside of the few that you've got on your list already.
Yeah.
The only other one that we haven't talked about, Applied Materials, is interesting. They don't tend to trade very well. AMAT. They did have news this morning. I just like the news because they announced that they've getting commercial availability of their cold field emission technology, which I just think is cool technology. So I don't know if it's going to cause any movement in the stock. Again, AMAT. It's even on earnings, it doesn't tend to trade that well, but I'll keep an eye out of personal interest.
Yeah, sounds good. It had a nice gap up yesterday. Was that a CPI related or that was on its own? Might have been on its
No,
own.
I think
That's a big gap.
Yeah, I think that was all related to the CPI. You can see it happened pre-market right at that same time when everything was announced.
Oh, yeah,
And
yeah.
and
Yeah.
yesterday, I should have mentioned at the outset. Yesterday overall was a little bit of a surprise, right? Because we had that massive move up, which you would expect in the CPI. What wasn't really expected was the big sell-off that brought everything right back to or below the same levels. I mean, I think Apple ended up red on the day yesterday. And after having that big gap, as did a lot of stuff. So that means that today, although it was good news for the market overall that the CPI number was down, so inflation concern seems to be easing a little bit, which means that there's less pressure on the Fed. With this announcement today, everybody's sort of predicting and anticipating it'll be relatively good news, meaning it'll be in line with what the interest rate increase is expected. Not going to have to push that higher, but who knows how the market's going to react, right? We could see some unexpected reactions. So I don't know. I think it'll be fun this afternoon, which is good because we've had really boring trading afternoons for about 2 months now.
Oh, the
So
afternoon has not been have not been
it
great.
has been it has been tough. There's been a
Yeah.
few things that you can trade, but most of the time in the afternoon, because I'm always here into the close, and we're saying, all right, I'm talking about all sorts of stuff because there's really not a lot of stuff to trade or things that are moving into the close. So today's the day, if ever there was one in the last 2 months.
Let's hope for sure. All right, guys, let's take it into the room and see what you guys like this morning. We're looking at both chats here, our YouTube chat and also our main chat. We'll start with Isaac. You're giving us Meta, not really gapping, but decent volume. Let's take a look here. Meta today, they are, yeah, actually, you are right. You are right here. Decent volume at 722, which is a little bit higher. There might be a block trade in here. Can quite see it on the pre-market. But that is interesting. Also, another thing interesting here, they gapped up, right? In many of the stocks, after they gapped up yesterday, they sold right back down to their previous day close. Apple, Amazon, and Nvidia, almost all of them. This one didn't. This one kind of held here and went sideways a little bit instead. So I'm not saying that says anything, but it could mean something. Maybe they're trying to stick around here around this 123.70, 75. So could be interesting on this one.
Are you saying the metaverse is getting some legs?
Yes, the metaverse is getting some legs, my friend.
There's a dad joke if you've ever been into the metaverse.
I
none of the people
I
have legs. But anyways,
I have not. I have not, but I knew about that from YouTube. So here, guys, you can see. I mean, they have recovered pretty well, guys. This was a nasty, nasty drop they had back in was it September, end of September? Yeah, end of September. No, October, excuse me. And you can see here that huge drop, and they have been able to recover. You know, in what I think is a pretty short time frame to do that, right? So, not bad there. Meta could be interesting. We'll put it as one on our list here. We'll see how it goes. Um, Okay, heading down, guys. What else you guys like this morning? mRNA, crazy move yesterday. I just wish the spread on this thing and the price action can be a little bit tighter. It was just all over the place when I was in that trade. And what it does is, I remember I was sitting to try to partial at 192, right? Was it right? Yeah, 192. My entry was somewhere in here. I was trying to partial here, and the minute I hit the hotkey, it dropped down all the way to like 190. You know, it's just a horrible feel. It's like a dollar drop, and that's because the spread was so bad. So, yeah, that was not fun. Um, but yeah, mRNA guys, possible opportunity for today. This morning, they don't have the great volume they had yesterday, but I think it's definitely worth a second look today to see if they can hold above this 185, which again they struggled a month and a half almost, just trying to get above that. They did that yesterday with a very nice action there. When everything else was going the other way, this could be fun. So I'll add
yeah,
mRNA. Yeah,
I think this muted market today may make a second day play a little tough.
yeah,
I mean,
yeah.
mRNA, if you're familiar with it, it's worth watching if you like it as a stock. But as you said, like the spread was bad yesterday when it was moving and there was a lot of
Mhm.
interest. I think today it's probably going to be even worse. So
Yeah, but see, but the funny thing with mRNA though is that we've seen days with less volume trade better price action than it did yesterday. So it was just
okay,
really funky. It was like it was trying to fight against the overall market going up and it trying to sorry, the overall market going down and it trying to go up. It was just very weird. I'm gonna put
yeah.
them as a possible because right now they don't have the type of action we would like, but that can change. I over in our YouTube chat, I see a couple of you guys throwing some stuff out here. We'll look at USB upgraded plug. Okay, so yeah, so that's why I have plug here on my secondary list. We just need more volume out of that one, but that's good news there. QS, what is QS? This is Quantum Scape. I think we've seen this before. Not a fan of these lower price tickers, and this is one that doesn't get great volume. I'm not seeing great pre-market action as well this morning. So more on the choppier side of things at the moment. The one thing I do like here, Bashuto, hopefully I'm pronouncing that correctly. Sounds French or something. Here is that we're losing this key level on the daily, right? So that could be interesting. If we can get some continuation down to 6, that could be fun. But right now, it just seems like it's missing some action here. Looking down at coin. What do we got going on here from Fabio? Coin this morning. Yeah, coin had a beautiful sell-off on yesterday. I mean, look at this thing here. There's a lot of stuff that sold off, but this one's really, really sold off. Well past even their day yesterday, right? So past their previous day close. So not fun for them. This morning we might get something. I think that the sell-off was so big here. You just might move sideways. You're back around that area or slightly below that support that we've been seeing around here. I think it'll still be a good one to keep an eye on. But I just don't know if we're going to get any type of crazy moves on it after such a sell off yesterday. Disney, let's take a look here. Disney this morning. No, not really in play, guys. Pretty flat. And this is definitely a block trade, right? Some of this volume here because you're not seeing that pre market activity at all in Disney this morning. Let's see here. So we got going on not so much. Yeah, yeah, you're right. Not too much. We gotta wait for FOMC. What time is FOMC, Peter, again?
2 o'clock for the rate announcement. 2:30 for the press conference.
All right, so we'll have to wait for that and kind of see what's going to be taking place there. Okay, so guys, I think we're all set. We have Delta, we have Tesla, we have Meta, we have Plug, mRNA, and Coin as a possible. Again, very light list. As you mentioned, Peter, I am going to be looking at some of our usual suspects, which are not here yet. AMD, of course, in honor of you covering today. We'll look at AMD, which, by the way, yesterday, and not just because you're on, out of all the sell-offs, Nvidia, which was horrible, I believe Nvidia was, and even Apple, right? This is not the greatest thing, and even Apple, I think AMD sold the best. I think AMD was the cleanest. So we'll see. We'll see what it does today. No volume this morning, though, as everything is just very, very light volume. Apple only has 324. I mean, there's nothing exciting about these volumes that we're seeing on our usual suspects. So, Apple and Amazon. How did Amazon do? I didn't have them on my list. Same thing, overall market stuff. So, again, no volume whatsoever, and they're like literally flat, guys. Like, look, we're 0.13 up on some of these. So, um, Amazon will put us a secondary list, but again, most of these are just gonna move with the overall market. All right, guys, that is what we have. Did I miss some down here? Let me see. Boyo, the ETF. This is for gas. Yeah, natural gas.
Mhm.
Yeah, you can watch this. I mean, this stuff is usually moving, guys. Look at the daily. The last couple of weeks, by the way, look how much volatility you're getting on the daily on this thing. So, again, just be careful, guys. This thing can move drastically. It can move a lot, so be very careful in your share sizing. I normally don't put these on my list. I usually just like putting actual companies. Maybe I'll do some, some ETF like the SPY, the Qs. But for the most part, this is tradable. You just got to know what you're doing here, guys. Be very careful because I think these are, I don't know what the leverage is on this, if at all, but they can move pretty aggressive. And they move a lot with very light volume, which I personally don't like. So just be careful. Amazon is good. We have it on deck. Nike. Is there any news on Nike? That is really the only time we take a look at Nike. So trying to see, do we have anything here? No volume. 8,000 shares only this morning. So somebody made a mistake. They meant to buy something else, and they hit the wrong ticker. They're trying to see how they can get their money back after dropping from 114 to
Yeah, I don't see any
112.
news on it.
So they're down quite a bit there. They're gonna have to wait for the market open. Tesla is good. Nvidia is good. Was active yesterday. Yeah. So all our usual suspects on deck here this morning as well. Did we look at KYMR, Dustin, one of our long time YouTube viewers here? KYMR. Yeah, we did. And this is similar to RNA. I mean, they got this, it's just, again, very similar gap up this morning, about 30%, right? Both of these are up nicely here. Same, around the same share flow here, 43, mid 43, high 40. It's just, I don't know, man. This daily, this price action here, the type of volume they get, I'm not too big of a fan. And also, today might be the day though. If you look at RNA, right, for the most part, their trading is like 700,000 throughout the daily, their average. They're doing that right now in the pre-market. So maybe at the market open, we might get some opportunity. But I just don't like. I don't even like this pre-market. Look how nasty this is, right? It's just not fluid at all. Um, I have it here because I want to see what happens, but I'm not a fan of the way this one or the one or KYMR is moving. They're both very, very similar. Be careful with the spread. I saw RNA have a nasty spread a couple of times there. Has an upgrade to 130. Which one? What has an upgrade to 130? NVIDIA? Nike. Oh, Nike. Okay. Who's the upgrade by? Because usually when we get these upgrades, if it's like a JP Morgan, Bank of America, you're gonna get some action. I doubt it. This is by somebody reputable or that can, move it quite big, right? LeBron
I
James
don't
upgraded
see.
it. Oh,
Yeah, I don't see an upgrade here, but it's possible. It's not coming
yeah.
up in my
It's probably not
data feed
somebody
at this
big.
point.
And it probably was not even Jared, because if Jared would have upgraded this thing would have been at 130 right now. Right now it would have been at 130. So I don't think it was Jared. All right, guys, what time is it? I moved my clock here.
Nine
Let's go
o'clock.
to 9 o'clock. Let's go to community events and announcements. And guys, bear with me. It's gonna be slower than usual because I think something screwed up with my hotkeys. Whatever I press is doing something completely different.
All right.
So
Well, Carlos is figuring it out. Why don't we get started? Because last night we had a great webinar by Thor. That's in our strategy sort of series. But he was talking more about how he leverages his psychology to exercise his strategies, and it was a great view as to how he has sort of managed that, I guess, problem for himself, and then some recommendations for our members. So that was in the webinar room at 8 o'clock last night. It was a great session. Thank you, Thor, for putting that on. Next Tuesday, we're going to be having John to sort of bring us into the Christmas season here with, to talk about how to reset your trading life. So any one of us has never sort of gone from A to Z, or Z for my American friends, without having a few road bumps in between. So oftentimes you just need to reset and regroup as we head towards the end of the year. It's a good time to look at that. So this is a very timely webinar being led by John at 8 o'clock next Tuesday. And then to end out the year, we've got Andrew himself going to talk about how he uses moving averages in his trading. Both of those are at 8 o'clock on respective Tuesdays, the 20th and 27th of December. Wednesdays are all about psychology, and this Wednesday we have Mike bringing us actually for 2 weeks in a row his continuing sort of building series on how to manage your psychology. This week it's about the path to become a successful trader. Next week he's going to build upon that, talking about the interaction between your trade book and your psychology. You know that we've got a number of tools in this community that we recommend. Having a trade book, basically a roadmap, a guide, an instruction manual, call it what you want, but it's a set of rules by which you trade is extraordinarily important. So, what we we use our own terms, but it's all about helping you become a better trader. And the key elements of that is within your psychology. So attend our psychology webinar if you're an elite member. Again, those are at 8 o'clock Eastern, Wednesday, so tonight at 8, and then next Wednesday, the 21st, also at 8. Thursdays are all about psychology and sorry, my goodness, I'm losing my mind here. Thursdays are all about mentorship. And on Thursday, we have 2 mentorship sessions, one during the market day with John, that's at 11 o'clock. And then in the evening, we have Mentorship with Thor himself, right, on Thor's Day. We rebrand everything because Thor sort of shares his thoughts. It's usually an excellent Q&A. We always get a ton of members that go there. Thor is probably one of the most impressive traders we've got in this community because he's really figured out. He is consistent. He's mature. He's even written a book about it, which is good because he's sharing sort of his approach and what he's done to get to his level of success. And I love his measured and metered approach. He does the same thing every day and does it so consistently, successfully that you have to listen to him. Have to listen to what he says because there's a lot of good tips there that you can apply to your own trading. So those are 11 o'clock and 8 o'clock respectively on Thursday. Don't forget, we've got our free tools out there. Tradingterminal.com gives you access to all the scanners, news, information, press releases, the calendar events. All of that stuff is compiled in there. We are looking to build for you basically the one-stop shop for everything you need for trading, including our simulator, where you can actually back test strategies, where you can run through different scenarios. You can basically put any stock on any day and compare it to any other stock and sort of run it like you're going through the market. You can actually take trades and go through that. It's a lot. Well, it's not live, but it's a simulator. It's sort of one day in behind in terms of the data, but it's fantastic. It's free. Just go to tradingterminal.com and you'll find all that and more available through that platform. If you wanted to join us, we'd love to have you here. There's so much more that we do, from having a live chat every day to all of the sessions we have, including our Monday onboarding and, of course, the Tuesday, Wednesday, Thursday sessions that I've already talked about. If you want to join and you haven't been in any community or our community before, try the intro. The intro membership really just gives you sort of 1 week access to the chat room and the onboarding class on Mondays. It'll give you a feel for what the community is like. Then you can make a decision if it's for you. In fact, I can even do you one better on that price of $39. If you use the code PreMarket24, when you go to checkout, you will get it for $24. And then, give it a shot, see what it's like. And we promise you'll find value in the community. We're very proud of what we do. And it's not just about the moderators and the fixed classes. It's about the people. We have fantastic people in this community, always willing and able to help. It's a very sort of strong, mature, and respectful community. And I love being part of it. So if you do then want to join for a longer period, we have a number of membership options. If you just want to sign up for on a monthly month-to-month basis, you can do that with our basic or elite. And if you wanted to join us for an annual, then you get a big discount off of that monthly rate. So look at the elite annual and use the code holidays50 to get that 50% off that you see advertised here. And that will really be a great deal for you. And hey, if you know someone who's a trader, maybe it's a good gift you can give to them. So there you go. Holidays50 is your code to get a discount off that. And hopefully we'll see you in our chat room someday soon. With that, we have got some levels to set and not a lot of time to do it. So hopefully the technology is working there, Carlos, and we can get you off to the race.
It's a little funky, but it's somewhat working. Guys, someone asked, Dustin was asking where's Thor's book. You can find it over on Amazon. I put the link in chat there where you can pick it up. And guys, make sure also that you are leaving a review. He has 48 reviews right now, and I know a lot more people have bought the book. So I know, take the time, and I'm usually not the type of person that leaves reviews, but I try to as best as I can. Please do him that favor. It means a whole lot to him to get his book out there. So the reviews are very, very important, especially for Amazon, because they look at that very, very closely. So support them there, guys. It's a great thing to do, especially if you're getting benefit out of Thor's book. And be honest with your review is important. Okay, guys, let's look here. We have I see we have our Andrew and Mike over in the Vancouver office setting up nicely. So let's take a look at some levels, guys. We have Delta. Let's start with see what's happening here. We have Tesla. We have Meta dropping here a little bit. We have AMD and Apple, and we got some possibles here that can hopefully do something this morning. But for the most part, very quiet morning, very light volume across the board. When Delta's one of your highest volumes here, you could tell there's a very low volume in the SPY, in the overall market this morning. All right, looking at Delta, high of the pre-market, 35.10. We'll slam a level there. And then towards the bottom, pre-market lows is pretty much the previous day close right in here. So we're not going to spend a lot of time doing a level there. And if you look at the bigger picture, guys, if you look at the daily here, you do have highs and lows for the last 2 trading days, kind of surrounding the price action. Where the price is now, like right below that, I know the high of the day is here on this one. But right below that, right over here around 34, 36, we do have a level. There's a lot of days slamming against that. You can see that they're opening, closing right at that 34, 36. So we definitely want to see a level there this morning and see how that is going to play out. So again, we're in a lot of congestion as far as levels right now. Look at this range. It's a lot of congestion here, both support and resistance. This thing can really go either way. I know we're up 4% on some positive news. Let's see if there's enough juice here for this thing to actually break out. Now, the one that we're all excited about that we are going to be watching closely is Tesla. I mean, this thing just continues to fall off the face of the earth here, making a new 52-week low yesterday around 156. This morning, the low of the pre-market is sitting over at 158.37. I'm marking down this 158.60 because there's just so many touches here. I know this is the low of the pre-market, but again, this level here is going to be very, very important. You got a lot of support happening there, trying to hold, but man, it cannot buy a win here, guys. I mean, let's try to push up towards the previous day close, cannot, slamming right back down towards the lows of the pre-market. If you're looking at the bigger picture, again, it's just on a downtrend here. The last 2 trading days, massive sell-offs for Tesla here. This is the 52-week low, so we're not going to have a next level below our low of our pre-market unless we go back way back. And I'm going to look at a weekly chart here. We'll do some levels off of that. 158 where we're at now, you saw an area of resistance there that cannot become support. But Tesla's so weak that I would not be surprised, guys, if we start breaking some of these pre-market lows. That 52-week low is definitely in jeopardy at the moment. 146.52, great level there. You can see the resistance across the board on a weekly. And you can also look down here at a 133.11. I don't think we'll get there, but we do got some levels of potential here if Tesla does decide to continue to sell off. So, and that 146 is not too far because Tesla can sell off a couple of bucks very, very quickly. I mean, we'll find support at 150 that could be a psychological level as well. So we'll see. And also eventually we should get to the point, I mean, hoping for the sake of Tesla, where the stock is going to be at a price that is just too good for investors to want to jump in. We'll get there, but not looking like that at the moment. Let's look at Meta. So Meta this morning, pretty flat right now. This is really more of a possible. I don't have anything else that really looks better than this at the moment, besides what we already have on our list. So I have it on here. We're surrounded by the highs and lows of the last 2 trading days, but we'll see what happens. More of a possible right now. They got a little bit of volume. We'll need to see if that's going to continue until the market open. As far as levels, just mark the pre-market high, and the rest is done for you. You do not need to add up anything else. Let's take a look at AMD. So AMD now. AMD, Apple, and Amazon. These are our usual suspects. They are not in play, guys. They're here because we expect them to get the volume at the market open. We expect hopefully the SPY not to be choppy, and many of these tickers are going to follow suit. But if you look at their volume today, AMD 154, you have Apple with 364, Amazon with 414, 413. These are extremely light pre-market volume. So they're not in play today. They're not in play unless something happens with the overall market. The FOMC talks around this afternoon might do something there, so we'll be looking out for that. We'll get something to trade today, but this just tells you today's not a blockbuster type watch list. So be careful, be patient, wait for the setup. This is a great day to wait 15 minutes, maybe even an hour before you take your first trade to kind of see where the volume is going to appear and what's happening. Also, great day for scanners, guys. Tradingterminal.com. You got free scanners there. We might have something that gets volume that might not be on this list, and those scanners are going to be able to help you identify that for today. So Indigenous Pathway says the kind of day to wait. Yeah, you definitely don't want to be too aggressive today if the market is not giving you the volume that you need, right? And we see many times where it starts off slow and then it picks up after some chop, it picks up and then you start getting some direction. So just we'll get something. Just be patient. All right, that's our list, guys. Let's see what our moderators have this morning. Peter, as we were preparing this, do you have anything else on your end that you like?
Nothing new that's come up. I will just mention, since I always watch the IPOs, we have none for today. A couple that we're expecting later this week. So we'll see what happens after this big Fed announcement. As I said, guys, I want you to absolutely keep in mind 2 o'clock and 2:30 are the key times for today, right? At 2 o'clock is when the rate number comes out. And if it's anything other than 0.5%, the market's going to go a little wonky, but you need to expect some movement no matter what, because the computers will react to that number immediately. And then at 2:30 is when the press conference is. And I said, it's a little bit slower of a move. That press conference usually goes anywhere from about 30 minutes to an hour. So we'll have to see what happens there. But that's I think what the market's going to be waiting for. So good trading today. And thanks for letting me join you.
No, thanks for joining and covering here, guys. Moderators list is blank. So our moderators, only Peter has his list here. He's looking at AMD, Apple, Delta, and a secondary list, Tesla, Meta, and DDOG. So that is the list so far. And I get it. It's not a whole lot that's on here this morning. So I'm sure our moderators are going to wait till last minute to see if there's something that pops up worth watching today. With that said, guys, thank you so much over on YouTube for joining us this morning. We're going to transition over to our live trading with Brian and Andrew, and looking forward to see how this market open is going to be, especially with the volume. So, yeah, excellent. Peter, thanks for joining and covering for Norm. I think we have you tomorrow as well, a couple of days, right?
Yes, you do.
All right. Looking forward to that, my friend. Guys, take care, trade safe. We will see you. Tonight is Wednesday, so we have psychology. You got Mike, and then next week you got Mike again. So you got your double dose of Mike back to back. Make sure you join him this evening for psychology. Take care, guys, and trade safe.
Trade safe, everybody.